Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss Warren Buffett, the Oracle of Omaha, the greatest investor of all time, and his most recent buys and sells in Berkshire Hathaway's $300 billion public equity portfolio. And we just got an update for his Q1 2021 transactions, and Buffett was a net seller in the quarter. He made more sells in his portfolio than he did buys and made major cuts to his positions in Chevron and Wells Fargo. He also added a new position that we're going to discuss in this video. And overall, we're going to discuss what Buffett's been doing to start out this calendar year, his focus on the market, and what we believe he's going to do throughout 2021. But before we take a look at his recent buys and sells, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy or any major market news. And of course, whenever we get updates on the transactions from Warren Buffett, arguably one of the best investors to ever live, we have to discuss them on the channel to see what he's doing and his outlook on the market at this current point in time. And if we start off by taking a look at Berkshire's recent performance, from the lows back in 2020, they have recovered very well, growing 70+% on the 12-month chart. And they're now sitting near all-time highs with a market cap at $664 billion. So this is one of the largest companies in the S&P 500. It's been operational for over 50 years, and this is a conglomerate that owns different companies and stocks from almost every different industry. They're globally diversified, they own so many different names, smaller cap companies, large big cap names as well, and as a whole, buying into Berkshire Hathaway is pretty much like buying a diversified ETF of private and public equities. And we all know Berkshire Hathaway over the long term has been one of the best stocks to ever exist. So in this video, we're going to discuss Warren Buffett's recent transaction in his $300 billion public equity portfolio under the Berkshire Hathaway name. And as I mentioned at the start of the video, Buffett was a net seller in the quarter, meaning he sold a greater value of stock in the first 3 months than he bought during that same time span. And of course, two major companies that he reduced his position in was both Chevron and Wells Fargo. And although he was a net seller, he did make one new buy for Berkshire's portfolio and started a position in Ion, ticker AON. It's an insurance company, and as you may know, Buffett loves insurance. He currently owns Geico, a very large player in the US insurance market, and he also started a position with a stake of $943 million into this insurance name on the market right now. And if we take a look at the ticker, they trade for $254 per share. And over the trailing 12 months, they have grown by 33% and currently have a market cap right around $57 billion. And we all know Buffett is one of the greatest value investors to ever live, so I'm sure him buying right around this level or earlier on in 2021 for maybe $200 to $210 per share means he believes the company did have a lot of value at that current level and was trading for a reasonable valuation. And also, during the first quarter, he did add on to his Kroger position, increasing it by 50%, and currently owns over 50 million shares of the company. So we can see right here, he bet on Kroger, the large grocery store retailer, and at this current point in time, that company trades under ticker KR for right around $37 per share, and they've grown by 15% over the trailing 12 months. And Kroger at this level sits with a forward PE of only 13.28 and a current market cap just above $28 billion. So those were the two big buys in the first quarter. He also added slightly to his position in Verizon. He added around 8% to his current holdings and now has 159 million shares of the big telecom company worth over $9 billion. And that makes it the sixth largest holding in Berkshire's total public equity portfolio. So Buffett does have exposure into the big telecom space from a nice high dividend name in Verizon. So overall, those were the three most notable companies that Buffett bought to start out 2021. And we'll discuss them in greater detail later on in the video. But now we're going to transition and take a look at the companies that Buffett sold to start out this year. And like we've seen many times, he's a net seller in the quarter, meaning he sold more stocks than he bought, and the companies he sold out of, and the most notable names include Chevron and Wells Fargo. And if we take a look at the numbers, Buffett trimmed his stake in Chevron by 51%. And this was a recent buy for Berkshire. They actually made these purchases in Q3 and Q4 2020. So it's been less than a year, and Buffett has already trimmed his position by 51% in the big oil company. And this was a shock to most investors because during their 2020 annual shareholder meeting, Buffett actually said he loved the company and did not feel bad about owning them. And if he had the opportunity to own 100% of Chevron, he would, because he believes the business is still going to be operational over the longer term. But if we take a look at Chevron's recent share price, they have recovered very well from the lows, growing 24% over the trailing 12 months. And Buffett added to this position in the company and pretty much started it late in 2020 when their shares were trading between $70 and $85. So from that point, Buffett must have sold for a profit of 20 to 30 or even 40% depending on its exact buy price. So we did lock in some nice short-term capital gains, and who knows, Buffett may be predicting a big decline going forward, and if that does happen, he may add back to this position for a cheaper price. So that was the big sell that Buffett made, but the second notable name was his massive reduction in Wells Fargo stock. From the latest filing, Berkshire Hathaway reported a total position in Wells Fargo of only $26.4 million. $26.4 million for Berkshire Hathaway is pennies. Back in 2018, the company had a position in Wells Fargo worth over $32 billion. Then, by year-end December 2020, they had sold off a majority of their position and only held $1.58 billion of the major bank. And then 3 months later, at the end of Q1 2021, they have sold out another 99% of their holding, and it now sits at only $26.4 million, making it one of the smallest positions in Berkshire's overall portfolio. And $26.4 million is absolutely nothing. I'm really unsure to even why they kept that and didn't just sell off the company entirely, but we'll find out if Buffett does reduce it completely in a future quarter. And if we take a look at Wells Fargo stock, the company has grown by 105% from their lowest point during the pandemic when the financial companies got absolutely hammered. And as a whole, Wells Fargo is probably my least favorite major bank, and I understand why Buffett has been reducing his position over the past 2 years. And I just believe that after the recent run-up in share price, bringing the company close to pre-pandemic levels, Buffett thought now is just a great time to offload his position, sell out of the small holding he had left, and just reduce it to pretty much nothing in Berkshire's overall portfolio. And one thing I do want to note is that Buffett is not against all financials. Of course, he has sold out of JP Morgan and now Wells Fargo, but the second largest company by market value in his portfolio is actually Bank of America. He owns 12% of the company with a current value of over $43 billion. So the second largest holding in his public equity portfolio is absolutely major. So he's not a complete bear against financials, just he picked the bank he believed was going to be the most successful over the longer term. And if we jump back over to the article, Buffett did reduce his position in some smaller companies as well, nothing as major as the sellout of Chevron or Wells Fargo, but he also did trim from his big pharma positions in AbbVie, Bristol Myers Squibb, and Merck. So overall, he did see some reductions and some pullback in that sector and took some cash and trimmed those positions. So as a whole, Buffett, we all know, has a major balance sheet with over $145 billion as of their latest report sitting in cash. $145 billion is available for him to make any acquisition, buy out different public equity companies, buy a company, take them private, so many things he can do with such a large cash pile. And Buffett's goal is to deploy around $80 to $90 billion of that cash for a new purchase. So he's still looking at the market. He believes most items are actually very overvalued at this current point in time. And I'm still personally waiting for the day that we wake up to see Warren Buffett announce a major acquisition or a major deal to take Berkshire to a new level and finally deploy that cash that has been building up over the past 5+ years. So now if we take a look at Berkshire's overall public equity portfolio before we deep dive into Aon and Kroger, the two companies that he just bought. So jumping over to CNBC, they have a great tracker that updates all of the holdings and ranks them through market value. So currently, Buffett's total public equity portfolio is valued at $295 billion. Just think about that. His public equity portfolio, so Berkshire's positions in public stocks, is worth $295 billion. There's only a handful of companies in the world that are worth over $295 billion, and Buffett has that just with his public equities, not including all of his dozens and dozens of private companies Berkshire owns as well. So if we take a look, by far his largest position is in Apple, the big tech company, the largest name in the world, the conglomerate that dominates the tech sector. And he owns 5.4% of the company with a current market value of $113 billion. His second largest holding is in Bank of America. He owns 12% of that company, worth over $43 billion. Number 3, we have an American Express holding. He owns around 19% of that credit card company with a value of over $23 billion. Then Coca-Cola, of course, he owns 9.3%, worth over $21.7 billion, and by far one of Buffett's most recognizable holdings. He's one of the top shareholders. He's been an owner of this company for decades, and as a whole, has no plans to ever sell out of Coca-Cola. He loves their business so much and believes they'll dominate for decades to come. And finally, to wrap up the top 5, we have Kraft Heinz with a position worth over $14 billion. And as a whole, many different companies, a lot of the most recognizable brands on the market, big names, dominant players with positions, all worth over $1 billion in each, in minor stakes within each company. And overall, Buffett holds around 40 different names in the portfolio, and we can see now at the very bottom, one of the smallest positions is now in Wells Fargo, a former holding that was worth over $32 billion just back in 2018. So a major transition and a change over the past 2 to 3 years. So that was a quick little overview of Buffett's total portfolio. Of course, he also has a major suite of private companies under his umbrella, which include railroads, different insurance names, and consumer brands as well. And now as the final part in the video, we're going to take a look at the 2 companies that Buffett bought in the first quarter in a little bit of detail. And that was Aon, where we started a new position worth just under $1 billion, as well as Kroger, where he added 50% to his existing position and now owns more than 50 million shares. So if we start off with ticker AON, they trade for $254, and this is an insurance company with a market cap right around $57 billion, a dividend yield of only 0.8%, and a current forward PE of 22.74. And if we take a look at their Q1 2021 results, organic revenue grew 6%, which is actually pretty good for a boring insurance company. Their total adjusted earnings per share was up 16% over the prior year, and what's very impressive is their total free cash flow in the quarter grew to $532 million, improving by 91% over the prior year as well. So the company had a great quarter to start out this calendar year, and going forward, analysts are forecasting around 12.5% per year share price appreciation for the next 5 years going forward. And at this current level, Aon is trading below their 12-month expectation, which is set at $263 per share, and the company is ranked as a slight buy, coming in with a 2.4. So that was the first company, a new holding he added to Berkshire portfolio, and the second stock in Kroger, he added a 50% boost to his existing position. So ticker KR, the grocery store company, the brand that owns a bunch of different retail names, currently trades for right around $28 billion, a dividend yield just below 2%, and a forward PE of 13.28. And we can see that they've adapted to the new trend of ordering before, just going to the grocery store and picking up, and actually getting your food without stepping foot in the store. And now they have over 2,200 pickup locations across the country, and their orders per day grew 128% throughout 2020. So that's absolutely incredible. More and more shopping done online is great for the company. It could provide nicer margins, less actual physical space needed if they ever want to reduce location size. And as a whole, I think Kroger is just a brand that's always going to have demand no matter what over the longer term. and they believe they can grow their earnings by 3 to 5% per year, and then do share repurchases and dividends that will add another 5 to 6% per year return. And overall, going forward, they predict 8 to 11% per year total shareholder return they can produce for their investors over the medium to long term. So getting this when the market average is between 7 to 9% per year would be absolutely incredible from a safe, boring blue chip name that is Kroger. So those were the two companies, Aon and Kroger, that Buffett made the greatest buys in to start out this year. And I think over the upcoming quarters, if we see any pullback in the market, if we see the S&P 500 drop 20, 30% from its highs in a huge pullback, Buffett may start to deploy that massive $145 billion he has in cash sitting on the balance sheet. So overall, the Oracle of Omaha, the greatest value investor of all time, just released an update for their transactions in the first quarter. So we discussed them. Like we said many times throughout the video, he was a net seller, selling and trimming his positions in Chevron and Wells Fargo, as well as his big pharma names, but also bought into Aon, an insurance company, and added to his Kroger and Verizon positions. So those are a little bit of a recap for Buffett's transactions over the first quarter. I hope you enjoyed it. I hope you got a little bit of an outlook on what Buffett is doing, and we'll see how he performs and Berkshire Hathaway performs going through 2021 and beyond. So thank you for watching to the end, and I will see you in tomorrow's video.